Good and bad news in Las Vegas real estate and real estate in general. I've got it all for you on the other side in my Robnostication, where I prognosticate about what's happening next in the Las Vegas real estate market. You're going to want to know everything I'm telling you if you're interested in real estate at all. It's important. I'll see you on the other side. Hey, what's up? I'm Rob Hau, Rockstar Realtor. That makes me the Realtor and you the Rockstar. Now you know how to find a Realtor when you need one. So go ahead and subscribe to my channel. That way you always have me on your side when you're ready. I'm going to jump right into something that is a little bit of the bad news. I'm figuring that some of you might not be getting a hold of good old Rob for maybe about the next 2 to 3 months because we're in a deep sleep. It's very slow. The interest rates have really made things tough for people to buy. Cash is still moving around out there, and I got some good news for you cash buyers. So hang out for the good news, not just for cash, but anybody. Everybody's going to be happy to hear what I have to say. I'm going to get to that. But let me just go and say that because of this deep freeze that we're in, we're going to see median home price continue to drop a little bit, maybe another chunky drop. We dropped $10,000 from $450 to $440 in October to November, and I expect another drop in November, maybe another chunky one, and then December we'll have to see if we don't start evening out, because there's going to be some reasons for that. It's just going to be that where there wasn't a ton sold, there wasn't a ton of movement, so it may not drop as that much more. We're going to have to see, because we may be getting to the end of this cycle quicker than I thought, and that's where I'm going to allude to that good news. But for the moment, I'm going to tell you more about, of course, I did prognosticate that. I did have on my last Robnostication that we would drop median home price, a fairly chunky size. I also called that we'd have more inventory. These are easy calls. If you're in the business, you know that it's happening. If you're doing any business at all, but I want to keep people updated. That's what this is really all about. So I'm just going to go ahead and go with my next month prognostication on what the median home price is. It's gonna drop again. Inventory will go up, maybe somewhat significantly. We only moved up to 4.6 months of inventory. I think we'll get up over 5.5. You know, just with as slow as it's going to be, and a lot of properties not moving. I think that's what we're going to see going ahead. We're going to see more inventory pile up. But here's some good news, folks. Rates may be dropping sooner than expected. They already dropped, actually, because of the release of the Consumer Price Index, the CPI report, and that showed that CPI went down. And all of the people that I watch, I've been watching them closely, and of course the Fed, for the way they're reacting to these types of things, and they are all a little surprised. Some of them called it. Some of the people that I really think are sharp, they called that this would happen, but the expectations were going to be that it was going to be higher. So the Fed may be getting what they're looking for.
They might actually be getting what they're looking for.
Which is kind of a bit shocking to me because of the way that the Fed chairman spoke previously, and he was looking a lot more hawkish. We might start seeing dovish. That would be great. As a matter of fact, we could be seeing, instead of rates going up, they might go down. Now, more information needs to come in. In other words, other reports need to come out about the economy and indicators that would be important to the Fed to know whether or not what they've done is working. But either way, this signifies that we could be on a sooner pace than expected, at least based off of more recent news where it looked like it was going to be on a longer pace than expected. So this is good news, and I'm going to go ahead and project out a little bit about what that means to you if you're, number one, cash buyer. Cash buyer, I've been saying in my videos, king and queen, you own the chessboard right now if you are a cash buyer, and your zone may be shrinking now, because it may only be that these sellers are sort of in a desperate position for a shortened period of time compared to what we thought. maybe this month, December, January. I think that might be the zone. I will keep you updated each month to what I'm seeing, but this may be the zone where you're gonna get the most bang for your buck and sellers that are willing to really come down on their price. And so if you're a cash buyer, don't have to worry about the interest rate. That's something that you might wanna be taking a look at. Cash buyers, yay. Regular old buyers, a lot of y'all have been sitting on the sidelines because you got sidelined by this rate. I've had clients that went out and just realized,
This is not gonna work right now.
and they're saying, we'll wait a little while. Well, that wait may not be as long. I'm crossing my fingers. We're all gonna cross our fingers. It may not be as long as we were thinking, because if we see the rates drop, they could be dropping as low as 5.5%, 5%. There were actually government loans that were going that low, FHA loans that were going that low this week. Your average loan is still up on the high sixes, but for your interest rate. But either way, I think if that's the case, we could be headed to lower rates. And the happy zone for rates, when we start to get like happy again, if spring comes around and it's a good time to sell. By the way, that's the other good news. If this is happening, I think we could be looking at a springtime, traditional springtime for sellers to get their houses on the market again, and to expect that there's going to be buyers waiting for them, because those buyers will be happier at the rates, they'll be happier at the prices that'll be out there for homes. So this could be getting back to traditional for sellers. That's good news. Some of the sellers that might be thinking, I have to wait longer, we're going to keep an eye on that for sure. So that's important to watch. As I've said in the past, I think 4% and below rates are gone. I don't think we're going to see those except for maybe specific products that would have to do with loans that you might be able to get, like on a 15 or less, time frame, 15 year. But I think that's the floor. We're just not going to go below 4s. That's my mindset on that. And I think the sweet spot where you're going to be looking like, yeah, this is pretty good interest rate, is going to be around 5.5%. That might be the norm going ahead. When we do settle out of these higher rates. This is all based on what, again, the CPI, which is a big marker down. So again, we're gonna see how things go going forward, and I'm gonna keep reporting back to you. So going ahead, I think we have a slow November. So enjoy your holidays, and December, I think that's where you're at, unless you're a cash buyer. If you're a cash buyer, this is the time, and I would recommend this almost always is the time to be looking for a deal out on the market, because your competition has exited the market. They want to go and do the family things and be in the holiday. They don't want to move. So your primary resident buyers are not as active. And I think that has always created a zone for a little bit more desperate sellers, or sellers that might be willing to be a little bit more open to negotiating a better deal. And I think in particular, again, the cash is going to be king. So, maybe you don't get to rest as much around the holidays, but if you're buying for investment, that's great. You don't have to worry about moving. If you're buying for yourself, well, you're just making a sacrifice and saying, this could be my best zone for quite some time to buy. I've been looking for this time to come upon us, and, all the doomsday that is just going to keep melting down. Again, folks, it's been one reason and one reason only, and if that reason goes away, in other words, if interest rates get better and start becoming perceived as, hey, we're not going up anymore, it's not a bad time to buy, then our reason for the declines in the markets goes away and we start to stabilize. Unless other shoes were to drop, as I always say, this is the only thing affecting our market: high prices and high interest rates. So once those go down, we even out. Again, looking ahead, cash buyers, your time, but buyers in general, get ready, keep on watching. I'm gonna have more updates for you. And sellers, spring might be springing on us. It may be a great time. Let's all cross our fingers that the Fed gets what it wants, and that some of this pain is really truly as short as possible. It was very short-term pain for the long-term gain. I hope so, folks. Really, really hope so. That is it for today. Make sure you subscribe to my channel. I have a lot more where this comes from. I will be doing lots of reaction videos coming up. I get, even the people that I've been watching to get some of my information, I'd like to show you them and react to those videos. and I'm going to react to more and more about what's going to come out on inflation and whether or not the Fed is getting what they want. Remember, if you need a Las Vegas realtor, if you're looking to get out of California, if you're looking to get your tail into Las Vegas, I'm your guy, and I'll talk to you when you're ready. All right, have a great day, everybody.